Howdy, friends. Corey Moser with your mortgage and economic update for Friday, November 21st. We're going into a holiday weekend, so happy Thanksgiving, everybody. I'll begin by letting you know that the 30-year fixed national average is at 6.36% and the 10-year Treasury yield is at 4.07%. Not a lot of change this week from last week, although early in the week, mortgage rates deteriorated rapidly, but they've been gaining some momentum yesterday and again today. But the stock market is suffering its worst week in the last 7 months. Part of that is because of comments earlier in the week from the Federal Reserve. It kind of seems like they are playing good cop, or bad parent or something in that effect. It seems like they offer you an ice cream and then they take you home and beat you. It's one of those situations where every time someone needs hope or expectations, or they flirt with the idea of a rate cut, they table it and say, well, we have to see the data. Well, your September payroll increased by 119,000, but unemployment is at its highest rate in the last 4 years, since 2021. So mixed data suggests the Federal Reserve is unlikely to cut rates next month. They did cut rates last month, but when they did so, Jerome Powell came out and made some hawkish comments, which caused the market to go into a spiral, and the market really hasn't recovered much since that rate cut last month. Here's hoping that things will change in a positive direction. If the Federal Reserve was just paying attention like the rest of us do, with boots on the ground and recognizing that people are hurting and we need some hope, we need something that will help drive things in a positive direction. But the stock market investors are sensing that we're going into a slowdown. That's partly why this week struggled so much for stocks, and why we're seeing a little bit of a rally in the bond market. Good news is usually not good news for mortgage rates. Bad news in the economy usually gives a boost for mortgage rates, and they follow that 10-year Treasury yield pretty closely. But here's hoping the Federal Reserve does make a consideration of cutting the rates, although those expectations have dropped tremendously. Have a great week. We'll talk to you again soon. Take care.